These are my stock picks for the week of March 9, 2015. What you're looking at are not my stock picks. My stock picks are actually in a little notepad folder right here. So let's go through them. I've got 5 for this week, as I do for every week. Again, these are swing trade positions. These are the stocks that I predict will go up at a decent rate over the next 5 days. Can't promise anything in the long term though. First one is JD. What am I doing? First one is JD, which is I believe it's a Chinese e-commerce company. JD.com. You can check it out. All right. What is good about JD? I did the analysis yesterday, so I forget a lot of stuff. But let's take a quick look at everything here. Let's see. I think there's probably a level of resistance that is being tested and will be able to be broken over the next week. Oh, got my VPN on. Okay. First of all, the analyses are very bullish overall. Alright, there we go. This is why. Full of support, no resistance. A slight resistance at 30 that's been tested several times last week. Twice or once. Okay, I'm sorry. But anyway, if we can break that 30 level, then the sky's the limit here. This is going up. It's strong everywhere except for the stochastics, which should be technically this is overbought. But if you look at the candlesticks, it's really not overbought. A day like this, March 3rd, shows, yeah, that's overbought. When you jump that high, you're going to fall. This is a slow and steady stock, but I think it's going to reach new levels next week, so this is a good time to get in. And if you're a buy and hold guy, this is also a good time to get in. That is JD. Next one is Morgan Stanley. You know them. So these are the two sites I use for pretty much all of my analyses. Go to Yahoo, make sure the candlestick line is on, look at a month out or 3 months out, depending on your time frame. And then stockta.com is great for getting the resistance and support levels. And there's some indicators down here that are useful. I usually check the stochastics and the Fibonacci's, the short-term versions. I think those are the two most useful here. All right, so let's take a look at Morgan Stanley. Currently, we are right below a level of resistance. Morgan Stanley is a weird stock that's kind of gappy once in a while. If you look at maybe 6 months out, you see gaps pretty much everywhere. That's good because it means it could jump past the resistance level, and that resistance level was tested on Friday. It's kind of hard to see, but if you look at the shadow, the upper wick of this candle, you can see it went all the way up to almost 37. And notice that the resistance that we basically passed 3 resistances in one day. So those are being tested. What we see as a bullish overall trend in the short term, bearish overall trend in the short term, could be reversed based on the Fibonacci's, which means that any downtrend we see, which is what we've recently seen, tends to be retraced. And if it's retraced to the level that we saw on March the 6th, those resistances, especially this one, this resistance turns into a support, which will keep us upward. So that is Morgan Stanley. Try to get in if we see an upward momentum crossing this resistance level. Next we got RF. Actually, we got 3 stocks for this week and 2 ETFs, 2 what you could call mutual funds. What are we doing? What did I just type? RF. Not familiar with this one. Nor is Yahoo. But it's a financial stock. Alright, where are we? We have just passed a level of support. I believe it was resistance before. That's why I chose this. Let's go back to this chart. So we just broke a resistance level, turning it into a support. It's pretty strong. The Fibonacci's are very bullish, so if we do go down and hit that support again, it's very likely that we'll go back up. I think I saw that stochastics weren't very good, but that just could be an indication that we recently had a spike, which will probably stick because the spike went over the support. Stochastics are useful for knowing whether something's oversold, but it's not 100% reliable. You'll see a lot of times the stochastics are really high. What you want to look at is the fast line. There's a slow line and fast line. So if you see down here, there's a fast line, the blue one, and if that one's over 80, then you're overbought. And if it's under 20, then you're oversold. But sometimes, for example, let's take a look at Apple. Sometimes you'll see that for a stock that's continually growing, the stochastics are telling you, hey, this is what overbought. Sorry, overbought is below 20. Oversold is above 80. So for a stock like Apple, it just keeps climbing higher and higher, and you're going to see the stochastics. Did I say that wrong? Overbought, yes, overbought is above 80. Anyway, if it's above 80 or below 20, those are the danger levels. But you see how it's been above 80, well above 80, all the way from February to March, and it just kept climbing higher. Even though the stochastics would say it's overbought, it's time to sell. If you don't factor in the support in that decision, then you're not making a good decision. It's just, stochastics are one type of indicator that can add to your confidence in your prediction, but it's not something that you should rely on all the way. Anyway, let's get back to this stock. Indeed, we broke a level of resistance that you can actually see. You see how all of these candlesticks are kind of touching 9.7, but they never pass it. Now we've finally passed it and actually closed above it, and we see during the day we reached almost 10 bucks. So now that we're at a new level, this will probably continue, and getting in next week early is going to be great. Alright, let's look at those two funds, ETFs. One is VXX, a very popular one. This represents futures volatility. So what you're doing is, you don't need to know the basics of this one, okay? But the idea is you get the advantage of changes in futures by buying this ETN. I was wrong, it's not an ETF, it's an ETN, exchange traded note, not fund. This one's interesting because based on the volumes down here, we see that the gap that occurred on February 12th should be an area gap. It shouldn't be a breakaway gap. In other words, this gap should have filled. Now, statistically, it's still going to fill, but the question is time. Now, if you watch this, you see there's a very clear bearish trend downward. Now it's kind of tapered off at one level, and we see a very decent 3 candlestick pattern right here that looks like a morning star. You've got a big red one and a tiny almost doji star candlestick, and then you've got a green one above it. And this candlestick pattern is very bullish statistically. So now we can say, looks like the stock's trend, the ETN's trend, has reversed, and statistically we will probably hit this level. Perhaps not within a week, perhaps it'll take a couple weeks, but this is a buy and hold until we fill this gap stock. So we're going to aim for the price point of about 33.31. Okay, so aim for that price point. That would be a decent profit because this stock is not really that expensive. So you buy that, you'd be getting what, like $5 per share, which is what, 5 divided by 28. So that's almost a 20% ROI, and it might take a month to fill, but you know, if it fills, 20% ROI is something that even mutual fund managers don't really get. So this is something to invest in. The last one is a fund, TZA. It's a fund that takes the Russell 3000. That's plural, not plural, but that's the possessive. It takes the bottom 2,000 small cap stocks of the Russell 2000 and reverses them 3 times. What that means is when the small cap companies, when the lowest of the small cap companies start to fall, this ETF, TZA, will grow. And that's what we see. The small cap companies were doing pretty well. And now, I guess they're not doing so well, because we got this high volume and then big candlestick going up. And again, we see this pattern, red, another red below, and then a green above. This is a very bullish pattern right here. Now, why this stock? Mainly because we have this another thing that looks kind of like a gap. It's technically not a gap, but this should, it's like a body gap. This should fill. That's my prediction. We're not going to make a lot of money on this, but still, because it's so cheap, if it does get up there to that price point, around 11.75, that's almost 10%. So it's a decent ROI anyway. Let's take a look at the support and resistance here. Alright, we got some ugly resistances at 11.74. Is that above our price point? That's pretty much right at our price point. So we're going to play until it hits that resistance, then we're going to sell. That's the goal. Fibonacci's are nasty. Stochastics don't tell us anything. Okay, so let's try to get to this price point. This is the resistance level. Sell at that time. That's it. If you got any comments, questions, leave them below. You can also get a free guide on gap trading if you go to the link that you see in the little annotation somewhere on this video that you're watching right now. Please subscribe. Actually, I'm going to put the link at the beginning. Yeah, I just want you to subscribe. Subscribe. You know why? Because you should. Do you know why? Because every week I'll be doing this, so you can actually get free stock picks. Okay, peace.